Dear friends, this is Chad Staskal, Managing Partner of Eagle Wealth Management, and I'm here with a special update. We've just witnessed an extraordinary move in the financial markets. Since February 18th, the Dow, S&P 500, and NASDAQ have all lost over 20% of their value in less than a month. The coronavirus fears continue to worry investors, and at the same time, oil prices have lost nearly 25% of its value, and the 10-year Treasury bond yield went below 0.5% as unnerved investors looked for some stability. In times like this, we frequently hear that some find it difficult to stay committed to an investment program when fear has gripped financial markets. In the past few weeks, I'm going to admit we've done a few double takes at the computer screen as we watch major swings in stock prices as well as the movement in bond and crude oil prices. Stocks generally do not make gradual moves during a bear market. Instead, they tend to spike higher and lower day to day. Nowhere are these spikes more dramatic than when the markets hit a bottom. Over the last 50 years, the Dow Jones Industrial Average has experienced 7 major bear market cycles, which is a price drop of about 20% or greater. On average, these bear market cycles lasted about 20 months, and they have lost a cumulative 37%, and they took about 57 months on average to fully recover. But we're not panicking. We expect lower rates and lower oil prices to provide stimulus for a strong rebound on the other side of the recent shocks we are experiencing. Typically, event-driven bear markets have a quicker recovery than those caused by recessions or banking system failures, and we expect that to be the case in this episode. Knowing that these types of declines are part of a normal, healthy market help us to stay focused on what we can control. We have spent the last few years talking with every client about the possibility of volatile markets and that we are prepared for them. We emphasize to each client, focus on your economy, not the economy. Why? Because we cannot control our political uncertainty. We cannot control our regulatory changes, geopolitical challenges, and we definitely cannot control the virus pandemic. If you allow things outside of your control to guide your financial decisions, things can look very scary. When we plan for black swan events that you just cannot predict, then you know you must be prepared for them. That is why we plan for your economy, so you don't have to change your plan based on the economy. First and foremost, we've made sure that every client is diversified based on their goals and income needs. We hold assets that can maintain as well as gain value when stock markets are declining. We know that many of our clients need income from their investments, and we can change how we raise cash for distributions. We build cash flow ladders for times exactly like these, where we can use cash and assets that increase in value during market corrections, so we don't need to sell stocks when they are down. We've been rebalancing portfolios while the markets have been hitting all-time highs, selling some stocks to keep your risk within your tolerance. We now plan to look at opportunities over the next couple of months to buy more stocks at these new lower levels. While our intention is never to minimize events as they're happening, our hope is that you can spend the time focusing on your safety and your family and not all this media madness. Like always, we're here to help you and your family answer questions that might surface. Whatever decisions you're considering, we'll be honored to support you through them. Please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call. We're happy to talk with you. Once again, this is Chad Staskal with Eagle Wealth Management, keeping you in our thoughts and prayers as we go through this coronavirus uncertainty together.